How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for April 10th, 2018. We're going to once again go through all of the currency pairs, major currency pairs, along with gold and oil, and take a look at what the institutions were doing with their positions. Alright, so let's take a look at gold. So what do we see here? A couple of weeks ago, the institutions had about 259,000 positions long on gold. All right. Many weeks back, they were up at the 305s right here. So price comes up, they're at 305. They start taking profits on their longs. Next time price pushes back upwards, they're at 259. Now this is a theme that we'll see unfolding with many of the other pairs as well, but I wanted to point this out because we're going to see similarities with the other currency pairs. All right, so right now 259, and we've been pausing at about 234,000 as price consolidated right here. What we can see is that shorts increased from 55,000 to 68 to 79. They used to be at 91. They have been declining, and on a future webinar I'm going to explain why this happens. Why do they close off shorts while they're taking profits on longs? Okay, there's a reason why they're doing that. So right now we see that over the last 2 weeks, longs haven't increased and shorts have increased over the last couple weeks. So that's a pretty good indication, not a solid indication, but a pretty good indication that we could probably expect a move to the downside. With the strength in the US dollar that I'm expecting to kick in very shortly, I think there's a very good chance that we see that happening. All right, not guaranteeing anything because we are getting a lot of consolidation here, and the chart is just not very clear on that move happening, but I'm just taking a look at the information that I have, and you know, the probabilities are pretty decent that we get that push to the downside. Okay, so but if you look at the coloration of the cells, they are blue, which means neutral, which means you should not be taking any trades on this one, and I'm definitely not trading gold at this point. Okay, what do we see here? We have oil. And so oil longs have been aggressive. We got that push to the upside. There was an institutional trade signal that I shared with the community that I took, and it is working perfectly, exactly from the zone that I said it was going to turn from. And the reason why it's turning from there is because it was an institutional zone. It was an area where the institutions wanted to drop price into it before they took price to the upside. So that's why it's working. It's working very well, even though positions are very aggressive. 87% of their overall exposure is geared to the long side. And take a look, net positions, 707,000 positions. That's pretty intense. So we got to be careful with longs here. Although the chart suggests that there is more room to the upside. And we are starting to see some really good setups potentially forming on the daily chart. So this could even go, you know, higher up to about this area up here is where my next target will be. So I am watching the charts, waiting to see if there's going to be that opportunity, and if so, I will jump on it. But right now we have longs very aggressive, shorts very cooled off, and overexposed. So eventually when they do start taking profits again on their longs, because we know that they took profits here, I think when they take profits again, the next spot is going to be up at these highs. So eventually this is going to come down pretty hard, and they're going to reduce their long exposure, but then eventually build up that long exposure once again. Okay, so let's take a look at the US dollar. What do we see with the US dollar? So this one has been just coasting and taking its time. This one's been playing out for many weeks now, as we can see. What do we see with the charts? Okay, so price is consolidating right at the descending weekly trend line. And what was I saying last week? I was saying that most likely what's going to happen is the institutions are going to have another push to the downside with the US dollar, and they're going to use something to trigger that. So we had negative NFP released as price was reacting to that descending weekly trend line, and what did we get? We got a slight push to the downside. So as price was consolidating, what did they do? They increased longs, but they also increased shorts. The net effect being short exposure goes up 1 point and net positions slightly increase from negative 1.1 to negative 1.8 thousand. So the sentiment still remains bearish, but weekly area of demand is in control. Descending weekly trend line is also in control. We need to wait for this descending weekly trend line to break. Once this descending weekly trend line breaks and we get a big push to the upside, then that opens up the floodgate for pressure to move to the upside. That hasn't happened yet. I suspect that it is going to happen, but just looking at the data right now, we see that shorts are aggressive and longs are cooled off. So looking at the data, we're not getting any indication that this push to the upside is going to happen. What tells me this push is going to happen is understanding market dynamics and knowing that based on market dynamics, there is a higher probability of price moving upwards. Okay, but we have yet to see the institutions come in and fill that dramatic amount of long positions that would be required to cause a break of this weekly trend line and a big push to the upside. So I'm still waiting to see when that is going to take place, if it does indeed take place. Aussie US dollar, what do we see here? We see that institutions closed off long positions, and this is the 3rd week in a row that they did this. So we used to have longs at 53,000, and that's when the contract ended right here, and then we see a decline. So basically they got out of their positions, their long positions here, and when they filled them back in, they filled even more long positions 3 weeks ago. Okay, so they're filling in even more and less of their short positions, and that goes back. So this is here, and then this is here, then this is here, and then this is here. So they close off longs, and then they fill in more longs, and then they fill in less shorts, and price ends up dropping, consolidating, and then a push to the upside. Okay, so right now you take a look at longs and they are cooled off. You look at shorts and they are cooled off. And you look at the overall exposure and the sentiment is blue, meaning do not trade. So that's what I'm doing. I'm not trading because I'm not convinced that the beginning of that bigger move to the upside is happening right now. I'm not convinced by looking at this. And looking at market dynamics on the daily chart, you can see that there isn't the proof that I'm waiting to see for me to get excited about taking longs on this chart. So for now, I am waiting. Let's take a look at the US CAD. So we can see that they've started to get aggressive with their long positions, right, since the contract expired here. 54, 60, 61, 59, and we see that shorts never got back to their aggressive 78,000 positions after the contract ended. Okay, that caused a big move to the upside, straight into a descending trend line, and then we got that drop into the weekly area of demand, where I said I believe we're going to start seeing the institutions build up a long position for a push to the upside. So we saw last week that buying coming into the market right with that candle wick right there. So overall exposure to the long side is 68%. Net positions is a positive 31.6 thousand. Long positions are aggressive. This is all supporting that bigger move that I'm expecting on the US CAD. So I'm already situated with some theme trades and I'll be watching price unfold and seeing if there is an institutional trade signal that will present itself that will be high probabilities for me to take. And if it doesn't, that's fine. I'm already situated with the theme trades, and I'll wait patiently until price makes that push to the upside. Okay? US dollar, Swiss franc, what do we see? We see that longs increased again for another week in a row. So we had 25, 27, now another one, 29,000. The long positions are aggressive, short positions are neutral, but coloration of the cells are somewhat blue, which means don't be trading. And it makes complete sense because we are sitting within a weekly area of supply. You should not be going long when you're in supply, period. You shouldn't. The only time you should, and there are certain times when you could, is like on oil when we were reacting from that weekly area supply. Price was dropping, but there was a very specific reason why I was taking that long. So, and I went through it in previous videos, and you can watch the previous videos to see the explanation for that. But in this circumstance, this is not a good time to be going long, so I'm not going long. Coloration of the cells, neutral, meaning do not take any trades on this. Even though 61% of their overall exposure is geared to the long side, doesn't mean that you should be going long. Okay. Euro US dollar. So, like I was pointing out on gold, so we had highs being reached, aggressive long positions, price consolidates, they close off long positions, and then price pushes back up, and we got an increase again, but overall we see a decline, all right, from 262 to 236. A 10% decline since hitting these highs, taking into consideration this big jump here from 221 to 236. And I believe that big jump was solely caused by price reacting from that weak daily demand zone that we had mapped out on the charts. I was telling you that price was going to react to the upside. That's exactly what happened, and the institutions added to their long position to help price get up from that demand zone, okay, or demand was being filled, which caused the increase in long positions. So either way, we have 73% overall exposure to the long side, and we have net positions at a positive 147,000. So everything looks great to the long side, right? Everything looks very, very bullish. The only thing is we're hitting this massive area of supply, trend line confluences, all the things that are going to cause price to want to drop. So waiting patiently, already situated short with some theme trades, and just waiting for price to eventually make its move. But like I said with the US dollar, we don't have a clear indication that the institutions are going to push this down. I'm basing my opinion on market dynamics and taking a look at what areas we're hitting. These higher time frame confluences, downward trends, trend lines on the higher time frames, supply zones that were responsible for removing higher time frame areas. So these are all the things that I'm looking at, which all these put together creates my my view on this pair. Okay, and if we go over to the pound, it's the same thing. So 99,000 when prices got up here, some profit taking on longs, and then we get this push up. Boom, 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 boom. Last 3 weeks, aggressive long, 1, 2, 3, aggressive long, getting price back up here. And I suspect what's happening is once we get back up here, and we should see this on the next couple reports, is all those longs are going to be closed off. So long, 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 take profits, drop, aggressive long, take profits on those longs, and then drop. That's what I'm seeing, because this push up here was very aggressive, and the momentum that was behind price to get price to move like this was very intense. So you can't get price to just hit and then drop. It just doesn't work that way. You have to shift that momentum, and that happens by, you know, it's like a ball bouncing on the ground. When a ball bounces, it doesn't hit and then go up, right? A ball bounces and momentum shifts or slows down. So then play this out in reverse. What happens? A ball bounces and then play it in reverse, right? That's how price reacts from areas of supply and demand, exactly like that. And so that shift has to take place because you got so much momentum. It has to slow down before it shifts, and that's what I believe is happening right now. This is a clear indication to me, based on examining COT data for many years, that that slowdown and eventual move to the downside is underway. Okay, let's go to the next one. US dollar, Japanese yen. So just like with the, was it the Aussie? Yeah, I believe it was the Aussie. Contract ended. They used to be very aggressive long. All of a sudden, boom, not so aggressive, 69,000, right? So that causes a drop in price right into areas of demand. And what do we see? Longs are still not that excited at this point. They're still very cooled off, but they're cooled off based on previous positions, right? So they drop it 69.60, 40. Now they're starting to build, but that's only 1 week of building, so that doesn't really tell us much. Okay, shorts are still somewhat aggressive based on previous position sizes, and net positions is a negative 2.7. Coloration of the sells, it's neutral but somewhat bearish. I'm not making any judgment calls based on this data though. Okay, I am basically taking a look at the market dynamics, and I know that institutions want to build a long position from here based purely on market dynamics. So now I'm waiting for the COT report to help support this idea. Okay, so but we're not seeing that yet, just like we're not seeing that on the US dollar, just like we're not seeing that on the euro. My thinking is, I'm thinking ahead of the game. I'm thinking ahead of price action. I'm thinking ahead of the institutions actually making their moves. I'm anticipating all these moves about to happen because I've seen this play out many times before, and I know that the chances are in favor of what I believe is going to happen rather than it not happening. And so now what I'm starting to do is I'm starting to sit back and watch and wait for the signs to clearly become evident that the institutions are going to go along with this this idea. Okay, so let's take a look at the Kiwi dollar. What do we see? So price consolidates on the weekly chart, and we have an increase in long positions and an increase in short positions. Net positions is a positive 22,000. You look at the coloration of the cells, they're somewhat green, meaning bullish. Maybe, maybe not. We're sitting on top of this trend line here. We could see a push to the upside. I'm not taking any trades on this because the chart is just a mess. But taking a look at the data, we see that the institutions are aggressively long. Their short positions are cooled off, but cooled off because they never brought, after the contract expired, their short positions back up to those aggressive levels. Okay, and so that caused price to, that pressure. Let's go back. So then there's that one, and then there's that one, and a drop. So they close off their short positions. They close off their short positions, and when they open short, they don't open nearly as much short. So opening up a lot of short positions would cause price to drop. You're not opening it up as much. Instead, you're closing off short positions. That creates a buying pressure. So it makes sense that we would see eventually a move to the upside. And then they add to their long positions and make them more aggressive, which that just causes price to eventually move to the upside as well. So possible to take any trades? Not for me. I'm not taking any trades on this one. Okay, so that's pretty much all the major currency pairs. I think, what do we got here? Let me just take a quick look at what is on the agenda for this week. I think we have Bank of Canada interest rate statement coming out on Wednesday, and that should be the only thing happening in terms of market volatility for this coming week. So again, the theme continues. I'm waiting and watching to see what's going to happen. I think if not this week, possibly next week, we're going to see the institutions making their big move. We have these strikes on Syria that came out in the news, so it's going to be interesting to see how traders react to that this week. So there might be some mixed volatility in the markets until things settle down. And it's my guess that the institutions will wait for that volatility to settle down, and then they will start planting their feet deep in the ground and start making some moves. Okay guys, so that's pretty much it. I hope you guys enjoyed this this video, and hope you guys use it to help plan your trades. And until next time, have yourself a great week.